So I'm not sure if you guys remember, but I made a video a couple of days ago talking about how I thought Tesla could get to 200 bucks per share, maybe even lower. And every day that goes on, guys, well, it gets closer and closer to that point. We got some news today out of China that we have to break down in this video around Tesla, which is probably contributing to the drop here. Maybe, I don't know. And overall, of course, you guys know the drill. We're going to break down the charts, my thoughts, what I'm looking to do. So if you all find value, hit the like button, make sure to subscribe. We're almost at 30,000 subs, guys. I think we're about 50, 60 subs away, something like that. I appreciate each and every one of you as always, and feel free to follow me on Twitter or X. I'm getting really active on there. It's at StasSurFest, or just type in Stas Talk Stocks on Twitter. You'll find me on there. Make sure to go follow me on there. I appreciate you guys as always. And with that being said, folks, cheers. Let's dive right into it. So Tesla stock right now, and mind you, the overall market is red. I think all the indexes are down, so we can't dog on Tesla. Too much, but it is down 1.7% right now, down about 4 bucks per share, as we have the S&P 500 pretty much at break even, still leaning more towards the red. The Dow's actually up a little bit, but barely, pretty much at break even, as we have the Nasdaq down 0.25%, and we have the Russell down 0.6%. So right off the bat, guys, it's pretty obvious that Tesla has not been doing well at all over the past couple of weeks. At this point, it's pushing 1 month. You guys can see we hit almost 300 bucks per share on the 19th of July, and now we're at 228 bucks per share. So pretty much over the past month, we've had only a handful of green days, probably 1, 2, 3, 4 green days, something like that. But pretty much, guys, we're down 70 bucks per share from that point, or around 25% in the past month, meaning we were already in a bear market, right? But now we're in another bear market on top of that, and we're under the moving averages. We have a death cross here, and to me, guys, it is pretty obvious that Tesla is trading in this channel that we talked about here. It's still trading in that channel. We talked about that in my last Tesla update, and on the yearly chart you can see it as well, and we'll break down the charts more in a couple of minutes. But first, let me show you all what's going on here today. We got some news out of China, so you guys can see on this CNBC article. Let me actually move my big old head over here, guys. There we go. Let's see what's going on here. Tesla makes further price cuts in China, reducing Model S and X by $7,400 to $8,500, you guys can see. And this is on top of the price cuts they've already made. I've lost track at this point, how many price cuts they've made, but this is on top of the ones they made a couple of months ago, whenever that last price cut was in China. And at some point, guys, it's getting to the point where it's like, all right, are you cutting prices now to really get the car in the hands of other people? Or is it because really there is no demand, nobody's buying, which, I mean, it's not really the case with the Model 3, and the Model Y. But in this case, with the Model X and S, a lot of people aren't buying. These are the two models that, well, don't sell nearly as much as the other ones, so they're cutting the prices even more. So at one point, I think it is detrimental to continue to cut prices over and over and over again. Not only does it make you look kind of desperate in a sense, not that Tesla's desperate for customers, guys, by any stretch of the imagination, but overall in general here. And I forget the other reason that I was going to mention, but either way, guys, at some point it's going to be detrimental if they cut it way too much. But overall, on Wednesday, they slashed the price of the existing inventory of their Model S and Model X cars in China, as the company looks to boost sales amid rising competition in one of its key markets. So, I mean, that's another thing, right? We all know there's a lot of competition, a ton of competition, here in the U.S. and especially over there in China. So, I mean, look, they don't have the market share that they used to, right? And they have to continue to cut the prices, hopefully not too much, because that eats into the margin, which they're already eating into the margin, right, as they've already cut the prices of these cars. But look, the Model X is on sale for 836,000 yuan, which is 114 grand, guys, down from almost 900,000 yuan. Previously, Tesla said in a post on Chinese microblogging service Weibo, and the Model S is now offered at 754,000 yuan, reduced from 808,000 yuan. So you have to have a lot of money over there in China, guys, to get a Model X. I don't think they're that expensive here in the U.S., are they? I think, can't you get a Model X for maybe 80, 90 grand? I mean, if you get it used, probably less than that. I don't know. But over there, if you want, Model X, especially new, you're going to have to pay top dollar. Or in this case, top yuan, right? So the electric car maker made another round of price cuts, yada, yada, yada. We talked about that already. And let's see, coming down here, Tesla continues to focus on gaining market share and boosting car sales at the expense of its margins. How long can they do that, though? That's the million-dollar question. In its June quarter earnings, the company reported operating margins of 9.6%, its lowest for at least the last 5 quarters. And again, it's probably going to get down even more the more they cut these prices. The continuing discounts concern investors who worry margins may erode too much. No doubt about it. That is a concern. And Tesla's discounts have caused fears of a price war in the Chinese market, which could impact smaller players. Shares of electric vehicle companies in China, including XPeng, which we've covered before, NIO, Li Auto, they were all lower in morning trading in the U.S. As, let's be honest, guys, think about it, right? From that perspective, if you're Li Auto, if you're NIO, if you're XPeng, and Tesla slashing prices, well, that could change the consumer's mind. They might be like, okay, now that Tesla cut their price, I'm not going to buy a NIO. I'm not going to buy, from Li Auto. I'm going to go buy a Tesla now that it's more affordable. Even though $114,000 for the Model X is very expensive, these price cuts, they could cause, again, the consumer, a well-off consumer, right, which Tesla is targeting, or that's really their market. Hopefully one day they can make a more affordable vehicle. But that little drop in price, that could change the mind of a more well-off consumer like that. And that's probably, scaring companies like XPeng, NIO, Li Auto, and they're probably thinking to themselves, all right, investors are like, holy crap, are they going to cut their prices now, right? Are their margins going to get hit even further? Maybe that's why the stocks are falling. So what do you guys think? And now let's come over here to the charts again. And by the way, if you're finding value in this video, hit that like button. Make sure to subscribe. I appreciate you all, as always, as we're almost at 30,000 subscribers, guys. And don't forget to get your free money from Moomoo, by the way. Let me shout this out now. Up to 16 stocks, each up to $2,000, guys. You can't beat it. Once you open up your account using that link down below and fund it with at least $100, you get 5 stocks right off the bat. And listen to this, folks. Fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks, and mind you, each of those could be valued up to $2,000, and it gets even better. Fund your account at least $5,000 on top of those 15 stocks for a limited time, by the way. You also get a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer, so get on it. Use that link down below. And full disclosure, that is an affiliate link. It helps out the channel. I appreciate you all, as always. And with that being said, folks, cheers. Let's break down what else I'm seeing here on the charts, which does worry me. I'm not going to lie. If we pull up the 3-year chart on Tesla, and if you stuck till the end, this is going to benefit you right here. I'm not sure if you guys caught this, but we have a head and shoulders. Maybe on the max chart, you can see it even better. Let me make my face a little bit smaller. Hold on, guys. Bear with me. There we go. On the max chart, you can see right here, we have a head and shoulders on Tesla, do we not? This is very worrisome. I mean, look, we hit back in 2021, in the beginning of that year, we hit 290. Then we had the explosion to the 400s. You guys remember that. Then we pulled back, right? Now we rallied back to about 295, 300, but we failed to break out, which, again, that was the high from before that rally to 400, which took place in the beginning, the rally took place in the beginning of 2022, or actually by the end of 2021, Tesla already peaked. But, before that, in January, into February of 2021, March, we were at 300. So the fact that we failed at that point, guys, is not a good sign at all, because look at this. Left shoulder, head, and this is the right shoulder right now. This is pretty bearish, guys. I'm not going to lie. Does this mean that Tesla's going to go to $50 per share? Of course not. Of course not. But it means that in the short term, there could be some more downside, which is good for people like me and maybe you out there that do want to pick up some Tesla on this weakness, because I don't think it's going to last too long, to be honest. So we can see right here, if I zoom in, boom, we got hit at that neckline, $300, which means the head and shoulders is still intact, and now we're starting to dump off. So if we come back here on the 4-hour chart, this could come down, in my opinion, like I mentioned in previous videos, 200, 210. And to be honest, we are getting a bit oversold now. I'm not going to lie. I mean, we've had a 25% down, past couple of weeks, right? So we are very oversold now. So maybe we get a little relief rally before it goes back or goes down to 200. I don't know. We'll see. But overall, guys, in this weakness, I'm looking to pick up some Tesla as a trade, full disclosure, as a trade. If it does get down to about, let's say, 200, that'd be great. Under 200 would be even better. We'll see how it goes. And of course, we'll do more updates on Tesla. So make sure you guys subscribe, hit that like button, and make sure to follow me on Twitter as well, or X at StasserFest, or go to Stas Talk Stocks. I'm very active on Twitter. If you guys want to go, follow me on there, and I'm building it up. So if you guys want to be a part of it, go on Twitter. It's linked down below as well. And make sure to check out my Patreon if you guys want to support the channel a little bit more. You get a bunch of perks. You get access to my private portfolio, which I show you guys how I'm building that. Every week I'm buying stocks. Every week we're putting in money. We're building that portfolio. So if you want to be a part of that, that's on Patreon, and there's way more perks on there as well. And it's pretty cheap, guys, if you ask me. So go check it out. And with that being said, folks, cheers. I'll see you later.